So the news is that the G7 is about to ban Russian gold. Now, on top of that, we also have to look at the volatility within the stock market itself. And that is absolutely what we're going to do today. We're going to look at two things: stock market volatility and basically the West banning Russian gold. And even if you don't own either of those, it is still going to impact your portfolio, and it is impacting your portfolio. Stick around, we'll get to it. Hey everybody, this is RC Peck with Fearless Wealth, and we are going to talk about two things today. We're going to talk about gold, and we're going to talk about a volatility index. And even if you have no interest in either of those, I can almost guarantee you the bigger thing what we're going to talk about is absolutely hurting your portfolio. So there's one main thing you're going to get out of this conversation. And that main one thing is how your brain is being tricked for you to do the exact wrong thing with your money at the exact wrong time. So let's get into this. I'm going to jump over to the price charts. So let's go to the price chart. So I want to start with gold. So I saw a headline this week. News came out that the G7, they're going to ban Russian gold. Now, if they're going to ban Russian gold, it kind of means that a huge gold supplier is going away, right? So less gold on the market would mean gold goes higher. But here's the thing, we have to go with what's actually happening with gold. And then the question becomes, what gold are you talking about? I know that sounds weird, but stick with me. So here's a price chart of gold. Now, this gold price chart is priced in US dollars. So look, on the positive side, I'll just say if gold priced in US dollars stays above $1,800, I'll show you what $1,800 is on here, then really you have to be more bullish than bearish on gold. The problem is a lot of times the equity division of gold, meaning the gold mining stocks, usually lead the direction of gold itself. And that does not bode well for people who are bullish on gold or who went out and bought gold just because they read a headline, they read words, or they heard words saying G7 bans Russian gold, right? So this is part of the problem investors have. They've never been taught to look at a price chart and understand a price chart in a simple way. And I want to say something about the word simple. Simple does not mean simplistic. Simple means hard to break. Not that many moving parts means not complicated. And so what you have here is the VanEck Vectors Gold Miners ETF, basically the miners who pull the gold out of the ground. And it is breaking down. In fact, it broke down on the news of the G7 banning Russian gold. So this is kind of a hat tip, to understanding how to read and knowing how to take information and then go look at a price chart and say, well, what's the price doing? So as the G7 bans Russian gold, gold miners are dropping. Now, gold in the U.S. is just, as I showed you a moment ago, I shouldn't say gold in the U.S., gold priced in dollars, it's just basically it's just been in a huge mess for, let's call it 2 years. Now, if your main currency is the euro, it's a very different looking, it almost looks like a different metal, right? Because here is gold when priced in the euro, and it looks great. It is above, or really staying above, its August 2020 high, which was its lifetime high up to that point. Look at this. It's amazing. This goes to the power of really understanding how to manage your money, right? So I have had clients in Europe and Asia and Africa and South America, and where you're from matters from the sense of knowing what the denominator is, right? I have clients in Europe saying, yeah, gold's a great idea. Clients in the US saying gold's not a good idea. You want that type of thinker to be managing your money. So here we have gold priced in euros saying, okay, G7 ban on Russian gold. Let's see how this works out. Now, really behind this, what we have is, and let me bring it up right here. I'll just bring it up. This is the US dollar. And if you want more stability in the world, you do not want to see this chart go higher. This is a price chart of the US dollar, and it is moving higher. And that means potentially more instability coming. So the first thing I wanted to talk to you about was gold, but really the underlining is not getting caught up, not getting taken for words and not knowing how to take words and put them into pictures, specifically price charts, because behind these price charts are literally the 400 million smartest people on the planet, certainly the richest people on the planet. And once you understand what they are, you can really grow your money differently. Okay, the other thing I want to talk to you about, and I typed it in wrong, UVXY, is I had a prospective client come to me and say, I'm in this strategy where I'm supposed to buy short-term volatility ETF because it's going to spike higher. And there's a lot of assumption this person's, I don't know, their advisor or the person advising them. And the mistake that this prospective client made, and the mistake that whoever's selling these services to him, is that because the market's down, volatility has to be spiking. And the S&P is getting closer and closer to being down as much as it was in the COVID crash. The problem is it's doing it in a very different way. So UVXY in the COVID crash went up something like, what was it? Let's just see how much it went up, an insane amount. Let's just call it 9x. It went up 9x in 30 days. That's 900%. And in that time period, the S&P fell 34%, but it did it in 30 days. Now, UVXY is up an amazing 15%, but really whipsawed, really whipsawed. And this is the problem with not understanding price charts, because here you have the S&P down. It was down 34% in 30 days. And here's the S&P down, 21% in 6 months. Understanding price chart, understanding how to read price chart, understanding how to follow price, having a money manager really be a student of price is one of the keys to bringing back stability, clarity, knowing you'll have enough. And this was just a great example this week where both with the G7 bans Russian gold headlined and someone assuming that every market correction is going to be exactly the same. And that's absolutely not true. Okay, so we got to talk about what the takeaway is. We are in a period of instability. I'm calling it instability, and it started 6 months ago. And until that period of instability ends, guess what? Things are going to be very unstable, both in the stock market, in the bond market, in the currency market, in the political market, in the geopolitical market. There is instability all over, just like there was in the 2000s and the 1970s. And that's the framework that really is going to help investors the most. Be like, okay, periods of instability, how do you manage money during periods of instability? And the problem is almost no money managers think this way. So the takeaway is check price. I think the G7 banning Russian gold, for gold priced in the US, it has no impact right now, maybe kind of weak. The miners are saying sell it, get out of it. If you're in Europe or you're paid in the euro, then it's actually stabilized a little bit right now. And of course, the same thing goes with volatility. You have to go with what's happening in this correction, not what happened in other corrections. Thanks, guys, for being in my world. I appreciate you watching these videos. I appreciate you sharing the videos. I appreciate you liking the videos, leaving comments. And hey, if you are interested in a powerfully simple way to have your money grown, where it's really clear what you're doing, where it's okay to sometimes not be in the stock market, to be able to step out of the stock market, then we might just be for you. And you can just go down below in the description and get on our calendar. Thanks so much, and I will see you on the next video. Okay, bye.